Hi there, this is Jim Hiles, your financial coach at GoPlan and advisor at First Capital. It's April 7th, 2020. We're going to talk about a lot of things today. I'm going to try to keep this short and sweet. That's going to be a challenge. Hope you all are well and faring well with this virus hopefully peaking. We're not sure exactly what the numbers are saying yet, but as soon as we know, that's why this thing up here on the screen is all about cross currents. We're seeing a lot of information going in different directions in terms of where we are. Jamie Dimon came out yesterday. He's the CEO of JP Morgan, predicting a recession. On the other hand, the markets are up 7%. So a lot going on out there. One of the main things going on out there is the stimulus package, and that's the CARES Act. And the CARES Act also has something to do with helping all individuals of all kinds, shapes, forms, and sizes. Take a look at it if you haven't. We've got a webinar we're doing on it, and there'll be videos you can watch, I'm sure, from our webinar and many others to learn more about how it's going to impact you. Small business owners, professionals, there's something called the PPP. I'm sure you've heard of that. And the EIDL, E-I-D-L. These are loans for small businesses and potentially forgivable loans to keep their businesses going. There's also been a lot going on with student loan debt, support of healthcare facilities, and so on. So 880 pages or so in the CARES Act. It's a lot. What we're also seeing is sort of a backup in the system. Just because they can write the legislation, which we do applaud them for moving quickly, doesn't necessarily mean the system can take it on. So we're seeing issues with the banks now trying to figure out how to disperse these funds. As a matter of fact, we've tried ourselves for our business, and we have yet to have a bank respond to providing any more information other than we're working on it. So good luck to you out there. If you hear anything new, let us know. It's a great time to talk with all your advisors, certainly your advisors like us, as well as your CPAs and your legal folks, because this is legislation that just is not that simple. You want to pay plenty attention to income levels, because that has a lot to do with the amount that you may be eligible to receive. I've heard a lot of good things going on, and use this time wisely. Take some opportunity to reconnect with family, to reconnect with people who are close to you, and to give support and help the community as well. Unfortunately, we're all sort of stuck at home, or most of us are, and it is what it is. So take advantage of the opportunity. Use the time to think about your finances in terms of your financial goals and where you want to go and how you want to make them work for you in your future. You know, we've had a couple of great days in the stock market, but we've had some bad days earlier on. We can't forget about those bad days, nor can we not have respect for probabilities of what could be another downturn in the markets. We're not out of the woods yet. It's still a time to be cautious. If you look at history, which we look at all the time, even as recent as 2008, we've had issues in terms of a bounce back rally and then a potential correction, which actually goes down to test the bottom. So we have to respect that probability. It's not just go for it. But I will say this: long-term money should stay long-term. In other words, if you're investing in stocks for 5 or 10 or 20 years from now, stay with that. Don't get emotionally caught up within the trading environment. There's so much media cross currents again out there in terms of what to do, that generally speaking, your long-term money is to stay where you are and trust the companies that you are investing in to continue to be profitable. Let me use that as a segue to move forward. The VIX, which is the quote unquote fear index, has subsided. That's the red mountain chart on the bottom. The Dow Jones squiggly line is on the top there, and you see it's sort of trended, has stopped going down and maybe trending flat and maybe going back up. But that's just one snapshot. Need to take some care here in terms of what happens. Just because the VIX goes down doesn't necessarily mean the market goes up. However, we're going to talk about what to do about it if you are in stocks, or what the position that we think makes sense in stocks, or in just investing in the longer term equities. There have been dislocations, like there are in every crisis, and this one caused by the coronavirus. And we use this barbell approach. In other words, go to the companies that are the name brands that have high cash flows and low debt and are managed well and are highly rated and have what we call wide moats, meaning they have a lot of protection cash available to draw upon. We think that these companies are probably going to do well in what's going on. The other thing to look at is the other side of the barbell, which are those companies which have been beaten up. And this may be the baby goes out with the bathwater. When liquidity crises happen, people, financial firms often need to just unload stuff, or it doesn't matter, just sell it. And that's what's happened here a little bit. So as a result, we could have some beat up companies, maybe unfairly beat up, or companies which might come back in a rebound. So that's our barbell approach to what we're looking to do here. Just a couple of quick touch points on that. Technology, e-commerce, cloud business, software, data centers, payments, processing, cybersecurity. We like tech in these particular areas. In the consumer side, we do like discounters, the Walmarts and Costco's. We like e-commerce, of course, Amazon. How do you argue with that? Housing will come back in the millennial sense, in what they call millennial demand, and housing related products should also rebound here as well. Communication services, internet media is certainly something we're all dealing with, and this could be an opportunity to actually take advantage of pricing dislocations here. Healthcare, drug makers, yes, this is something that we're all looking for a cure. But we're also looking for from a continuation of the trend to perhaps relook at how we're doing our drugs and making of drugs in this country. And then once commerce starts back up again, there's going to be a pent-up demand for healthcare in a number of areas. We also like financials at some point. I mean, banks have been beaten up, and maybe rightly so. But we don't think banks are necessarily going out of business. There's stress created in the financial system, and we like diversified and dominant asset managers here. And a number of these rebound companies, I get this all the time, should I buy airlines and so on? There will be time to do that. Travel companies, certainly airlines, entertainment, shipping, logistics, real estate. As long as they meet a screen of being a good company and we think will benefit from a rebound because their finances are intact, that's what we prefer. We don't really like to speculate just because something's down a lot, we should buy it. So that's kind of where we're going when it looks to answer your question about what are you looking to do right now with stocks. Let me speak just a second on bonds. Bonds, stay short term right here. There might be some pricing opportunities to buy corporate bonds because the Fed has come in and they supported and created a backstop, actually a market. They're buying bonds, corporate bonds and municipal bonds, potentially might be attractive here. Alternatives, these are hedges. I would stick with the hedges for now. The best hedge, which we have in our portfolio in a higher level than a long time, is cash. We think cash has been the best performer in the last 30 days, and we kind of like it that way. That means we're also going to have some opportunity to put some money to work. If you have cash, you should be thinking about opportunities to put money to work at some point in the near future. Anyway, enough about me, enough about where we are in the marketplace. And let me close by saying this: stay safe, stay smart. If you have any questions, please feel free to reach out to us. Happy to talk to you anytime about your portfolio, your plans, what's going on in your life, and so on. Anyway, keep those jokes and emails coming. I certainly enjoy those. Take care. Jim Hiles signing off. Thank you.